Warren Buffett just revealed that he has an arbitrage position on Activision Blizzard stock. And if you remember, Activision Blizzard is a takeout target of Microsoft as they announced a deal that actually was approved by shareholders last week. Now it just needs to go through regulatory approval. And this is amazing for us because this is an opportunity that we've been talking about on our monthly calls with the Patreons. So that's what we're going to dive into in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. Alright guys, welcome back to the channel where the mission here is to help at least 1,000 people achieve financial freedom much sooner. And guys, I am tickled happy today because it's been about maybe 10 years since the last time Warren Buffett and I sort of crossed paths on opportunities that we both saw, I invested in, and then I later found out that he had also invested in. So it's really cool to see that. It happens every once in a while, and it's always really cool to see that you're thinking in line with the greats in this business. But that being said, I actually believe this Activision opportunity has the potential to give you a higher than 25% rate of return if it's closed in time, and that's what we're going to dive into right now. So let's go. So you can see the Berkshire Hathaway meeting is actually taking place right now as I'm recording this video, and so I had to pause the meeting just to record this video because I think it's really cool and it got me really excited. So Warren Buffett revealed that he has a 9.5% position, which is worth nearly approximately $6 billion, and the position is effectively an arbitrage position. Not really an arbitrage, but kind of an arbitrage. He's betting that Microsoft's deal to buy the business will effectively be approved, and it'll boost the current share price, which is at around $76 per share, to that $95 per share mark. And I absolutely agree with him, but I do want to point out the risks here. And so for some of you guys that aren't really aware of this opportunity, back in January, Microsoft actually announced that they expect to purchase Activision. And you can see here in the press release, Microsoft intends to acquire Activision for $95 per share in an all-cash transaction, valuing the company at $68.7 billion. Now, there's some funny business going on here, and I'll show it to you, but they do go on to say the purpose of their investment. And I always like to see when there's large mergers and acquisitions, what is the purpose of the transaction, and does it fit to the overall fit of the business? And you can see here that it does fit because they're saying that the gaming is the most dynamic and exciting category in entertainment across all platforms today, and it will play a key role. Here's the key, a key role in the development of the metaverse platforms. And you know what? Back in like 2001, 2002, when Bill Gates initially announced that he was going into gaming, I think I'd be more suspect back then if they were to make a huge acquisition. But now, gaming is just part of the lifeblood of Microsoft. They've been really successful with the Xbox. I'm a PlayStation guy, so I'm a little salty, but we'll leave that at that. And you guys can see here, the Activision Blizzard shareholders approved Microsoft's acquisition last week. This was something that I was really paying attention to, at 98% in favor for the $95 per share buyout. So this is really good news. So all that's left is regulatory approval. But as some of you guys aren't as familiar at looking at arbitrage opportunities, I wanted to show you sort of my thinking pattern on how I went through this when I was sort of figuring out if I wanted to make this investment. So the first thing I looked at was, does Microsoft have the cash? Well, the good thing is I have a full valuation model on Microsoft that the Patreons do have access to. And you can see right here, all cash, baby. Microsoft has way more cash than they need to make the deal. In fact, they have enough cash to make the deal twice. And as Jay-Z says, don't buy anything until you can buy it twice. Okay, moving on. The other thing that the Patreons get access to is, in addition to what the intrinsic value of the company is, you can see that the intrinsic value for Microsoft is $270 per share, and the current share price is $277 per share. So I'm not interested in buying the company right now. But in addition to that, there's additional economic indicators which gauge risk for the company. And as you can see, that Microsoft is top shelf because they have no debt, they are inflation resistant, and their economic moat is absolutely strong, and it's just continuing to grow with the types of businesses that they're entering into. So if there is a huge economic downturn and the share prices for many companies fall to irrational levels, you can bet your butt that I'm going to be going after the companies whose names I have highlighted in green on this list that the Patreons have access to, and there's only like 7 or 8 names that are highlighted green. I will absolutely concentrate all of my buys to those names, and I have a lot of cash sitting on the sidelines to do that. And like I always say, you guys can get access to all of the models that we're following, all of those top shelf names at the $5 per share Patreon level. And like I always say, if you subscribe to the Patreon and you decide that it's not for you, no problem. Let me know in the Patreon by messaging me that it's not for you, and I'll refund all of your money in that first month. So no risk to you. Now let's move on. So what is the downside risk here? So what happens if it doesn't get regulatory approval? Well, you can see here that I'm actually valuing Activision at $75 per share, and then I'm adding approximately $9 per share of excess cash. So here's the funny business. So you notice that Microsoft is offering $95 a share. Note that of that $95 per share, approximately $10 a share is cash. So just something to think about there. But yeah, there's not a huge amount of downside risk. As you can see, the company's worth somewhere around $80 per share. So the real question then is, what is the approval risk? And I've already done that research for you, and I'll just show you right here. The deal is expected to be reviewed by the Federal Trade Commission, which is led by Lina Khan. Lina Khan is a scary name for investors, and here's why. She has long advocated for a more forceful approach to reviewing deals, particularly by the biggest technology companies. Under her leadership, the agency has blocked NVIDIA's acquisition of ARM Limited, as well as Lockheed Martin's deal for Aerojet Rocketdyne Holdings. She's also resurrected the FTC's monopoly case against Meta Platforms, which seeks to split off WhatsApp and Instagram. And if you split off WhatsApp and Instagram from Facebook, you effectively kill the company, in my opinion. So you can see here that Khan is very anti-growth via acquisitions by big tech platforms. And by the time this deal gets reviewed by the FTC, it will have a Democratic majority. So that's something very important to note. And guys, the Patreons already know from my conversations that we do have on our monthly calls, the one challenge that I have with the current US administration is that they're very unpredictable. And so you don't know what could happen. So there's a very real risk here. And that's why the shares are trading so much under the announced deal price. People are worried that the regulatory approval will not happen. However, I agree with Wedbush securities analyst Michael Patcher, where I do believe that there is a chance that the FTC will launch a lawsuit. In fact, I think that there's probably like a 50% chance that they launch a lawsuit. However, I think the chances of them winning are zero because it's very difficult to prove that this market will get exponentially concentrated with Microsoft acquiring Activision. You guys might be able to disagree with me in the comments below. Let me know what you think, but I don't think Microsoft acquiring Activision significantly concentrates this market, but I might be wrong. I've been a gamer for all my life. There's a lot of IPs out there doing some really good things, and there's a lot of free-to-play IPs, and I think if you add up all the time that gamers spend playing, most of that time is probably on those free-to-play games like Candy Crush and the free WWE wrestling game and whatever else that you can download onto your phones. And you can see that they do say that in the last sentence in this article as well. Microsoft would not have a massive share in the market for console games or video games at large. And current antitrust law overlooks so-called freemium business models common in gaming. So that freemium business model is what I was talking about, where there's all these free games. You know what? You get really addicted to those. One that almost probably everyone got addicted to was Candy Crush. I think Activision owns that one. So what's the upside here? You can see here that at $95 per share, if you divide that by the $75.60 per share, the upside here is 25.6%. And if you catch this on a down day, you can potentially have an upside that's higher. Now, I'm going to show you another way to get an even higher upside, and that comes from selling a cash secured put at a far enough dates. You can see here that this is the January 19, 2024 cash secured puts. You can probably sell those at $19.50 per share, which is the difference between the current share price and the deal announced price. And then you can take that now and compound it. So even if there's a delay up until January of 2024, you still have access to the funds and you've compounded them. So either way, you get your money up front. That being said, with cash secured puts, you do have to put the money aside just in case if you do get exercised on those securities. I personally would never sell a cash secured put without having the money set aside, just in case if the deal does fall and I do get exercised on the strike price. Now, with that said, guys, there's another arbitrage opportunity that I'm going to cover on this channel in the next video. So in order to get access to that arbitrage opportunity, please take a moment right now and subscribe to the channel and ring that notification bell. It's absolutely crazy that almost 30 or 40% of you guys have rung that notification bell. So it really speaks to me on how valuable you guys think this channel is. But also, I did a very thorough deep dive into Alibaba's recent share price run back up to $100 per share. And I think it's very important for you to take a look at exactly what's behind that run and what's not behind that run. And you can get to that video right here.